Hello, everyone. This is Rob McDougall from Zhang Financial here with your economic update for the week. Today is Monday, December 16th, 2024. So last week, the big news, as we previewed last week, economic information that came out, economic data, and it was actually a little disappointing for the market, and particularly it hit the bond market. So starting on Wednesday, we had CPI data, both CPI headline and CPI core. The CPI core was actually in line, plus 0.3% month over month, same as we had in October. But for November, the headline inflation rate actually increased more than expected. Expectation was 0.2% month over month in November, came in at a positive 0.3%. So that was disappointing, didn't really rock markets. But then on Thursday, the other economic data, the producer price index, PPI headline, PPI core, that came in definitely higher than expected. So the headline number was expected to be up 0.2% month over month for November. It came in at positive 0.4%. Core was in line with expectations, up 0.2, maybe because of rounding. Nonetheless, markets definitely reacted to the PPI being higher than expected. So also last week, in terms of economic strength, looking for pockets of weaknesses, we did have a disappointing initial claims number on Thursday. So the expectation was 220,000. It's been actually lower than that most recently. It came in at 242, so a negative surprise there. So in total, not a great week in terms of economic data that came out. Inflation expectations moved up on the information last week. We'll look at that in a moment. But the Federal Reserve, Atlanta Federal Reserve expectations for GDP did not change. Still, expectation here in the fourth quarter, growth of 3.3% above what we actually saw in the third quarter, which is plus 2.8, 2.9%. Inflation expectations, as I mentioned, did creep up last week. So it was actually up 9 basis points from 2.24% to 2.33%. Again, that's the 10-year break-even, 10-year treasuries minus 10-year tips. So inflation expectations rose on that sparse data from last week. This week, be very key. We'll talk about it a little more, but the Fed funds rate, there will be a rate decision rendered this Wednesday. Expectations, though, have really solidified, kind of surprisingly, expectation that we will most definitely get the 25 basis point cut. It's 97% at this point. So that's definitely going to happen. And that was it on the economic front last week. So we'll take a look at now and see how the markets reacted to it. And as I already prefaced, it was negative. So the S&P 500 down 60 basis points, not a big deal. For the year, up 28.6%. So gave up a little bit, not a big deal. But under the covers, as we take a look at it, growth, value, not much difference. Both actually down 2% during the week. But large cap held up much better. It's down 30 basis points. Small cap down 200 basis points. In terms of the international markets, developed markets ex-US down more than the S&P 500. Developed ex-US minus 1.6%. But the outperformer for the week, emerging markets, up slightly, 18 basis points. And China drove that. China up 0.44% on the week. Fixed income, as I've already mentioned, did have a pretty rocky week. The Bloomberg U.S. Aggregate Bond Index down 1.4% on the week. So now the year-to-date return on that particular index below 2%. So the 2-year last week, the 2-year yield, that was up 14 basis points. The big move, the 10-year up 23 basis points. So let's take a look at the economic activity that will be released this week. So tomorrow we start with retail sales month over month and ex-auto. So the expectation is actually a acceleration in the month of November. So month of October, retail sales month over month up 0.4%. It's expected to increase just slightly to a positive 0.5%. Then if you strip out autos, actually even quicker. So month of October was up 0.1% month over month. Expectation for November is that will be up plus 0.4% month over month. If we take a look on Wednesday, then, we have building permits and housing starts and the Fed rate decision. So in terms of building permits, largely in line with what we saw in October, up a little bit. Expectations 1.43 million. In terms of housing starts, that also is expected to be up just a little bit, 1.34 million. The Fed rate decision, again, 97% probability they will raise 25 basis points. The big discussion this week, including a Wall Street Journal article that was issued today, Monday, is that the expectations for future rate cuts, particularly 2025, market currently has 3 priced in, but there's speculation now, there's questioning whether or not we will see that because of some of the economic data that we just discussed that we saw last week, plus the fact that the U.S. economy, it's kind of hard to make the argument that we really need to cut rates if the GDP growth in the fourth quarter does indeed come in at the 3.3% as the Atlanta Federal Reserve believes we're growing at. So lastly, during this week on Thursday, we have initial claims. Now expectations has risen a little bit based on the 242,000 we saw last week. Expectations is that will come in at 229,000. And then we get the existing home sales on Thursday. That's the other two housing metrics is expected to be up slightly, just over 4 million. Friday, the big day. PCE numbers will be released. Personal income, personal spending, consumer sentiment. So after the Fed meeting on Wednesday, Friday will be just a large, very impactful day, very likely, in terms of economic data. So core PCE coming out, PCE. And for the month of November, the expectation is for core PCE, that will be up 0.2%. Month of October, that was positive 0.3%. So the markets are expecting slight deceleration. The headline number in terms of PCE month over month expected to be the same as it was in October, a positive 0.2% month over month. Personal income, that is expected to slow a little bit. Last month we saw unexpected upside, 0.6% month over month in October. That is expected to come in at a positive 0.4%. Conversely, personal spending is expected to accelerate. Month of October up 0.4% month over month, expected to come in for November, positive 0.5%. Lastly, Michigan consumer sentiment. Last month it came in at 71.8%. Expectation is that has improved, and this is significant, could be the election, not sure, but expected to come in at 74.0. So that's it for the economic activity last week, preview of this week, and how markets reacted to news last week. We thank you very much for your attendance. We'll look forward to seeing you next week. Thank you.